Most investors I meet in Dubai don't even know what they're buying into: a master community, a multi-developer project. And yet this is crucial information. It's what can turn your investment into something profitable or a real nightmare. For those who don't know me, I'm Agate. I've been living in Dubai since 2013 and have been investing for about 10 years. I founded the Dubai agency to support European investors in their real estate investment journey in Dubai. Today we're going to clear up a real confusion that many investors have: the difference between buying in a master community or a multi-developer community, and most importantly, why this changes everything when it comes to security appreciation and returns. I'll illustrate this with concrete examples from Dubai. For example, among the already delivered master communities, we have Creek Harbour, Dubai Hills, and Downtown. Whereas among the multi-developer communities, we find Business Bay, JVC, Arjan, and Marina. At the end, I'll give you my advice on how to choose the right structure according to your goals. All right, let's get started. Let's start by laying the groundwork. We often hear terms that sound similar, but really don't mean the same thing at all. A master developer is when a single developer, the main contractor, leads the development of a large-scale project and is responsible for overall planning, quality, consistency, and infrastructure. A master community is a neighborhood or area already planned as a complete entity, with infrastructure, access, malls, green spaces, leisure facilities, all under a single governance or vision. It's like a small city within the city where you often find everything you need on site. A multi-developer community is where several developers are involved in the same area or community. Each plot or phase can have a different developer. There is often less coherence and the development is more heterogeneous. Why is this important? Because these differences have a strong impact on the quality of infrastructure, future appreciation, rental yield, and above all, clarity for the future occupant or investor. Let's first take a look at the master developer, master community option. Here we're dealing with a turnkey setup. Imagine that you're buying in a neighborhood where everything has been designed from scratch by a single developer. That's what you'll find, for example, at Creek Harbour, where there is a single developer, Imar. And here you have an urban plan, infrastructure, parks, schools and roads, all managed by one developer. There is strong coherence and lower risk. If we stay with Creek Harbour, you'll always find architectural coherence, a well-defined environment, and an overall project vision. If you buy there, you're also buying into the credibility of the master developer. In fact, that's why at the time I invested in Dubai Creek Harbour, because I was drawn in by the overall project and the developer's reputation. The equivalent emerging today of this type of community would be, for example, the Beyond project in Maritime City. You know that you are part of a section of a well-planned development by a single main player. You benefit from a clear narrative, a comprehensive plan, and a coherent offering for a well-defined, rather upscale audience. The advantages of this model are that you get better coherence. There is a single project manager and better infrastructure management. Often, the value appreciation is better because the whole project is delivered or planned in a truly serious way. But obviously the cost is often higher and the entry opportunities are much more limited. Now let's look at the options for multi-developer communities. What are the opportunities and risks that this type of neighborhood offers? You know these communities very well. Among them are Dubai Marina, Business Bay, as well as JVC and Arjan. In this area, there are phases, different developers, each with their own standards, their own services, their own contracts. This can be an opportunity, for example, because prices are often more affordable there. There is a lot of choice, several possible budgets, and as a result, more challenges as well. The visual consistency in general or the quality can vary from one building to another. Some parts may be delivered late or are insufficient. The long-term value can depend on which developer, which phase, or which building you bought in. Let's take Business Bay, for example. It's a mixed-use area with potential, but with various developers. You need to look at who is building your building, which phase, which view, and depending on whether you buy from Ellington or from Danube, the property's long-term appeal will really not be the same. The same goes for Arjan and JVC. It's always better if you bought near the entrance or exit, close to the mall or the future metro with a good developer, rather than on the edge of the highway with a low-end developer. At the time I'm speaking, the most promising multi-developer areas are Dubai Island and Maiden Horizon. Both are developed by Nakheel in terms of infrastructure, but the buildings are developed by several different developers, which offers varying price points and standards. The good reasons to invest there are that you'll have a lower entry price, potential for capital appreciation if the overall area develops well, and above all, these are areas that offer better rental yields. To sum up, these are areas that offer quite a few advantages, but you need to be extra careful when choosing the project, its location within the neighborhood, and the unit itself. The question isn't about deciding which one is better, but rather about fully understanding the stakes of these two models in order to choose the best option based on your own goals. It's like with everything. Nothing is completely black or white, so together we'll look at the nuances. Since you're an investor, here's how to make a conscious choice. If your priority is security, owning a property that will appreciate and hold its value over time, and rental yield isn't your number one goal, then a master community will be the best option for you. In other words, if your approach is more about building wealth, then you should go for Maritime City or Damak Island. If your priority is the entry price and rental yield and you're willing to take on a bit more risk, then a multi-developer community will suit you better, but you'll need to do a more detailed analysis. And in terms of neighborhoods, I recommend looking at Dubai Island or Meydan Horizon. Now I'm going to give you my practical recommendations. Analyze who the developer of your specific property is. It doesn't have to be a big name, but it does need to be high quality. Don't just look at the area, because in a multi-developer community, each building is different. Check the community plan, access, services, infrastructure delivery, transportation, and so on. Even in a master community, things can get delayed, so make sure that construction has already started. Adjust your strategy and choices according to your goals. Immediate returns versus capital gains versus personal use, the right type of community will depend on that. In summary, buying in Dubai isn't just about, I like the sea view, so I buy. You always need to ask yourself, am I in a neighborhood controlled by a single developer, or am I in an area that's very shared? And what does that mean for me? My property value? My rental yield? I hope this video will help you better understand the differences between a master community and a multi-developer community. And if you're interested in investing in Dubai and ready to take the next step, contact me. Whether it's me or a member of my team, we'll be happy to support you with your project. Thank you for your attention. Don't forget to like, share, and I'll see you very soon for the next video. See you.